Hello, traders. Gary Wagner with the Gold Forecast. 22nd day of February, Tuesday, approximately 10:30 here a.m. in Honolulu, Hawaii, and this is the daily report. Gold trading under some pressure this morning amidst a round of profit taking, down about $8.50. Currently trading at 13.97, 13.98. Bid-ask spread. I did send out a notice last night. We moved our stops to 13.93. Those stops were hit. We did, in fact, pull profits yesterday. On today's report, I wanted to spend a couple of moments and show you what led me to the decision to raise those stops up so high, and we're looking at it right now. This is a 240-minute Henkin chart, which means that each Henkin candle, represents roughly 4 hours in trading. Now, as you can see, I have my Elliott wave numbering count, and this is, of course, that bottom that we hit at 1308. And in terms of our minor count, I have it counted as 1, 2, 3, 4, and this large fifth wave here, which puts us at the top in terms of wave 5. Now, in terms of our intermediate, we were at C. That takes us to 1 here. And on top of that, as I was looking at all of these, I saw that for the first time, we actually began to see some real weakness in the market. In other words, as you can see on the Henkin chart, and of course it's a lagging indicator, but these are 4-hour candles. As you can see, we had solid straight candles, and then last night we had our first indication of that market turning around. Now, the big question is going to be, are we going to see a very, very shallow retracement like we see right in here between 3 and 4, a sideways retracement, or are we going to see what I call a genuine retracement, such as here from B to C, or here from 5 to A, or these subwaves right in here? As you can see, what we do have is this range narrowing right now tremendously, and my sentiment is that we want to remain flat until either A, this market does in fact break down, form a bottom, and the bottom we'll talk about in a few minutes in terms of where I think that market should go, or if we get a sideways market. In other words, if we get the market just moving in a very, very narrow trading range, such as we get right here and such as we got right here. This is that 1365. It's how it looks on a 240-minute average chart. And as you can see, it took a while, but when the market broke out, of course, that's where we entered the trade, right in here. And then we exited the trade, of course, right around here. So we still picked up about $20 profit on the trade. Now, traders, if the market truly does have a retracement here, and my belief is that there is at least a very plausible opportunity for that to happen at this point, my sentiment is as follows. Of course, we went over the wave count here when we hit the top of wave 5, and that is my belief right now, and that is in terms of the minor count right in here. This, of course, is wave 1. And then in terms of the big wave count, we are at wave 5. My sentiment is that the logical point to look is going to be roughly a 23% retracement of this rally that we saw here, meaning from 1308 to 14, I believe it was 12 or 1413. A 23% retracement would take us right to around the 1385 point. And so I believe that if we do see this market continue to have a round of profit taking, that would be a logical point to re-enter the market. Now, on the other hand, if we get a sideways move, meaning we get another breakout, a pennant type breakout, and as you can see, we do have these ranges starting to really compress here, then we'll probably want to buy a breakout over 1400. In other words, once it breaks and breaks hard above 1400, I would consider that also. But those are the two parameters that I am going to look at. This is our daily chart, so you can see that I can't put in the I can put the intermediate and the majors, but not the minors in. And as you can see on this wave count, what we're looking at right now is the fact that our A, B, and C 5, we're in wave 1 of large wave 5. If in fact we do see that market come down, my sentiment is we'll see it come down and test, as I said, roughly around 1385. It'll be a very, very small retracement. And then we'll go into a large wave 3. Wave 3 should actually propel us to new contract record highs. And that's my belief, at least for the short term, over the next 2 to 3 weeks. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.